The first round of federal stimulus checks are starting to arrive, with some 60 million direct deposits expected this month. And that's not the only benefit of the $2 trillion bill. There are several other ways the federal government is helping people shore up their finances. For more guidance, I chatted with Cory Sickles, president of Safe Harbor Retirement Group. Cory, thanks for joining us today.
I'm glad to be here.
So I think people assume the stimulus check is the only item in the CARES Act that directly benefits everyday people. What are the other new changes that are designed to ease our financial burden?
Well, the biggest change taking place right now is your requirement distributions. So if you're age 72 or above, that's when you have to start taking money out of your IRA, your 401k, or 457, or even a deferred comp. So they've actually relaxed that, and you don't have to take it out in 2020. And the reason behind that is it's based upon the amount you have to take out is based upon your 2019 December 31st date, which when the market was a lot higher at that point in time. So if you don't need to take your required out, then you don't have to.
Let's get into a little bit about suspending all RMDs for 2020. What's the biggest benefit of suspending RMDs?
Well, I think the biggest benefit will be is if you don't need the money, it's going to allow your retirement account to grow. So the best thing that you can do is if you don't need it, leave it where it is so you can actually, have the benefit of the market coming back where you'll be able to take that money, in 2021.
Cory, what about those people who may have already taken their RMD for the year?
Yeah, so if you've already taken it out, you have 60 days to roll it back in as if you never took it out. Now, if you have taken an inherited IRA or a beneficiary IRA, if you've already taken that distribution, then you actually cannot, put that back in there.
Okay, and I think a lot of people turn to their 401k to make emergency loans. What's changed with that process, Cory?
Well, the nice part is one of the things they're doing is they've increased the amount that you can take out on your loan. Before it was only the maximum amount is $50,000. So if you're completely invested in your 401k, they've raised that limit now to up to $100,000. And the other nice part about that is when you do take it out, of course, you're going to have to pay taxes. It's going to count as ordinary tax income, but the tax liability can actually be now spread out over a 3-year period. Now, the other nice part about this is once if you do take a loan out, you also have the ability to pay that back over a 3-year period as well. So it's not going to hurt your contribution. So if you're still maxing out your 401k or anything like that, this repayment is not going to have any impact on which you can actually still keep contributed into your 401k.
Sure. And aren't there usually withdrawal penalties, Cory, when you take money out of a retirement account?
Yes. There's usually a 10% penalty if you take it out under the age of 59 and a half. And during this time or during this year, until actually September of this year, they're actually withdrawing that 10% penalty.
So is borrowing from one of your retirement accounts a good idea?
Well, ideally, you don't want to do that, just for the fact that you want to be able to make sure that your retirement account, account's growing. However, it's better than actually, getting loans or maybe even putting things on your credit card that's going to have a lot of higher interest rates. So it could make sense, so if you've maybe been quarantined, or if, as long as you've been impacted by the virus one way or another, then you're able to actually take this money out without that 10% penalty. So if you've been furloughed, lost your job, hours cut back, anything that's had an impact on your income coming in, it might make sense to do that. And then again, you'd have a 3-year period to pay that back. And those taxes can also, again, be spread out over a 3-year period as well.
So that can give people some extra time. So let's get into this week. There would normally have been lines at the post office, slow websites filing their taxes, but thankfully we get a reprieve.
Yes. Hopefully everyone already knows that, they haven't, extended the deadline to July 15th. Now, I would say if you are going to get a refund, I would actually still apply now so you can actually get that refund at this point in time. But they have extended until July 15th. One other thing they actually put in there, just for the fact that I think there's going to be a lot of, I don't want to say issues, but I think there might be a lot of charitable contributions this year just with the loss of jobs and the loss of income coming in. But normally a charitable donation for 2020 is you only get 60% of that write-off. This year, in 2020, you actually will get 100% of the write-off for any charitable donation as well.
Cory, if someone would like to reach out to you with questions, they have a lot of their time on their hands now being home. How can they do that?
Well, the easiest way to do it is you can always call us at 614-760-0670. You can also visit our website at safeharboroh.com. Again, all of my meetings are complimentary. There's no obligations. And of course, during this time, we can also set up a conference call, or we can do a video chat via Zoom as well. So I'm really here to help and answer any financial questions that any of our viewers might have.
Great advice today, Cory. Thanks so much for joining us.
Thank you.